Good evening, and welcome to tonight's special report. I'm bringing you the latest news from the world of finance. Today, we delve into the intriguing realm of the gold market. In an economic landscape marked by fluctuating currencies and shifting sentiments, the gold market stands as a captivating testament to resilience. Let's take a moment to understand the current state of affairs. The gold market, quite intriguingly, has been showcasing a mild positive bias. This is despite the strengthening of the US dollar, a factor that traditionally exerts downward pressure on gold prices. However, the precious metal has been bucking this trend, holding its ground and even gaining some. This unexpected resilience of the gold market isn't just a testament to the inherent worth of the precious metal, but it also leads us to ask, what's driving this market? What are the underlying factors that are contributing to this strength, even in the face of a stronger US dollar? To answer these questions, we need to delve deeper. The gold market isn't just about the metal itself, but also about the perceptions, strategies, and sentiments of those who invest in it. It's about the economic conditions and monetary policies that shape these perceptions and strategies. As we move forward, we'll be taking a closer look at these elements. We'll be examining the role of investors, their shifting strategies, and how their bets on potential Federal Reserve interest rate cuts are changing. We'll also be looking at the perspective of key Federal Reserve officials and how their insights might be shaping the gold market. It's clear that the gold market isn't just navigating through uncertain economic waters, but it's also charting its own course. Despite the challenges, it stands as a beacon of stability for investors seeking refuge from market volatility. This unexpected resilience begs the question, what's driving this market? Well, it seems investors are recalibrating their strategies. As the economic landscape shifts, investors are adjusting their expectations and rethinking their approach towards potential Federal Reserve interest rate cuts in 2024. It's no longer business as usual, and this new sentiment is causing ripples across the financial sector. The gold market in particular is feeling the effects of these changes. The precious metal has long been viewed as a safe haven asset, a go-to for investors in times of economic uncertainty. And with the winds of change blowing, investors are watching the gold market with a keen eye. But it's not just about what's happening now. This shift in investor sentiment is also a reflection of what investors anticipate for the future. They're looking at economic indicators, gauging the strength of the economy, and making predictions about the Fed's next move. And while the Fed's decision-making process is shrouded in complexity, one thing is clear: investors are adjusting their bets, and it's having an impact on the gold market. So what does this mean for the average investor? Well, it means that the gold market is more dynamic than ever. It's a market that's influenced by a multitude of factors, from macroeconomic conditions to investor sentiment. And as investors recalibrate their strategies, the gold market is responding in kind. But remember, change isn't necessarily a bad thing. In fact, it's a testament to the adaptability and resilience of the market. And in the face of economic shifts, the gold market has demonstrated time and again its ability to weather the storm. So as we move forward, it's important to keep an eye on how investor sentiment continues to evolve. It's a critical piece of the puzzle, one that could provide valuable insights into the future trajectory of the gold market. This shift in sentiment suggests a reevaluation of economic conditions and monetary policy expectations. It's a fascinating development, and one that could have far-reaching implications for the gold market and beyond. And speaking of the Fed, all eyes are on key officials scheduled to speak later today. The world of finance is abuzz with anticipation, as these speeches often provide valuable insights into the central bank's perspective on the economy and potential future policy actions. Among the speakers is Philip Jefferson, a seasoned economist with a deep understanding of monetary policy. He is known for his insightful analysis and clear communication style. His remarks will certainly be closely watched by investors and analysts alike. Also on the list is Susan Collins, a brilliant economist with a wealth of experience in both academia and policymaking. She's widely respected for her expertise in fiscal policy, and her views on the economy are highly regarded. Last but certainly not least, we have Lisa Cook. A champion of economic equality, Cook brings a unique perspective to the table. Her focus on inclusive growth and her commitment to understanding the economic experiences of marginalized communities makes her insights particularly valuable in today's diverse economy. These three officials, each with their own areas of expertise and perspectives, will be sharing their views on the state of the economy, the outlook for inflation, and the path of future interest rates. Their words will not only shape expectations for the Federal Reserve's upcoming policy decisions, but also have the potential to influence the direction of the gold market. Given the current economic landscape, their views on inflation in particular will be of great interest. With rising prices putting pressure on consumers and businesses alike, any insights into how the Federal Reserve plans to combat inflation could have significant implications for the gold market. Remember, when it comes to the Federal Reserve, it's not just about the decisions they make, but also about the expectations they set. The way they communicate their views on the economy and their policy intentions can play a big role in shaping market sentiment. Philip Jefferson, Susan Collins, and Lisa Cook are expected to offer insights into the central bank's perspective on the economy and potential future policy actions. As we await these crucial remarks, it's clear that the gold market is navigating through uncertain waters. Economic shifts, political unrest, and changes in monetary policy can all contribute to a volatile financial landscape. Yet, amidst these swirling currents, the gold market remains steadfast, demonstrating a resilience that has become synonymous with this precious metal. This resilience isn't a new phenomenon. Gold has long been considered a safe haven asset, a role it continues to play even in today's complex and interconnected world. When other markets tremble at the slightest hint of instability, gold stands firm, offering investors a sense of security and an anchor in the storm. But why is gold so resilient? It's a question worth pondering. Perhaps it's because gold is tangible, something you can hold in your hand. It's not a digital asset subject to hacking or an investment dependent on the health of a single company. Its value isn't tied to any one nation's economy or currency. It's a global asset, respected and valued around the world. Or maybe it's because gold has been a store of value for thousands of years, a constant in a world of change. It has been used as currency, as a symbol of wealth and power, and as an investment. Its lustrous appeal is as enduring as the metal itself. Regardless of the reasons, the fact remains that gold has proven its resilience time and time again. It has weathered economic recessions, political upheavals, and fluctuations in the stock market. And while the future is always uncertain, history suggests that gold will continue to shine, even in the face of adversity. So as we watch the ebb and flow of the financial tides, remember this. The gold market is more than just a collection of numbers and charts. It's a symbol of stability in an unstable world, a beacon of resilience in the face of uncertainty. Despite challenges, it remains a beacon of stability for many investors seeking refuge from market volatility. Well, that wraps up tonight's report on the gold market. We've explored the resilience of gold prices amidst economic shifts and looked at how investors are recalibrating their strategies in response to changing economic conditions and monetary policy expectations. We've seen how gold continues to shine as a beacon of stability, even when facing an unpredictable market. This resilience is not by accident, but rather a testament to the inherent value of gold, its historical role as a store of value, and its uncanny ability to hold its ground in the face of adversity. We've also highlighted the role of the Federal Reserve, with key officials set to provide their insights into the state of the economy and potential future policy actions. These remarks will undoubtedly have a significant impact on the gold market, and as such, all eyes are on the Fed. As we move forward, it's important to remember that the gold market is a dynamic space, influenced by a myriad of factors. As we've seen, shifts in investor sentiment and monetary policy can cause ripples in the market, but gold's resilience remains a key theme. So, what's next for the gold market? Well, that's something to watch closely. Stay tuned for further updates as the situation develops, and we continue to bring you the latest news from the world of finance. In the meantime, we encourage you to like, share, and subscribe to our channel for more financial news. Your support helps us to continue providing quality content and insights into the world of finance. And finally, as we sign off for today, we want to remind you that the world of finance is a complex and ever-changing landscape. It requires careful navigation and informed decision-making. Whether you're an investor, a financial professional, or simply someone interested in understanding the financial world, we hope our reports provide you with valuable insights. Remember to like, share, and subscribe for more financial news. Until next time, take care.